What's the probability that they won't change interest rate? Um, yeah. It definitely, the probability is there. I wouldn't say it's a high probability, but I don't account for that scenario because I think it's lower probability. Okay. Five minutes left until the next or the last FOMC of the year. So this is the last and biggest macro event of 2025. This is why I told you to take advantage of the 50% deposit discount by ForexC, because you can make good money on events like this. Now, a bit complicated as you know, I first in the morning I was quite bullish on gold, but then I was thinking, and I don't see any probability that the Fed is going to be dovish. And in my opinion, it's going to be a quite hawkish narrative for exactly the reasons that I explained. Number one reason was actually before that. I'm just going to answer this question. So yes, you can claim your bonus on the ForexC website, but it's too late now. It's too late now to do it. I don't think they're going to approve that fast in 3 minutes. So most of the people who claimed it in the morning, they get the money on their account by now. So once again, today's FOMC interest rate decision. Many traders are fixated on the interest rate decision, but this is pretty much baked into the market if they cut 25 basis point. If they don't cut 25 basis point, now that's a different story, and that's going to be good for my sell position on gold. FOMC interest rate decision today, but it's not the most important. Many traders, I think about 60% of retail traders, don't even know what's the economic projections, and they always just fixated on the interest rate, because that's what they see, interest rate, but they don't even know what the interest rate is and how it affects the real economy. So when the document comes out and it's published on the FOMC or Fed website, immediately open it and go to page 4. It's always on page 4. The summary, the dot plot. Always open on page 4. And look how the dot plot changed since the last summary published. I do have 2 sell positions, yes. Very nice turnout in the VIP. So yeah, I'm curious to see what the Fed has to say about interest rates. There you go, 3 positions there. Ooh, so exciting. Let me get my AI analyst ready. Very exciting. FOMC tonight. This is the dot plot that all of you need to watch. And you need to compare this year, the September one, and today's We got 20 seconds until the release. We got 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. There you go. Oh, market is moving. Interest rate decision was delivered, and I believe it was. The gold is moving up, which is not good for my sales. Yep, they did cut the interest rate. Now let's have a look on the dot plot. Has it been released yet? Yes, there you go. The projections material, quickly going to export it. Gold is moving up in the meantime. Okay, let's go to page 4. Ah, fuck, it's indecisive. Hasn't changed significantly. Which is a problem. It's a big problem. It's a big problem. So when you look at the dot plot, hasn't changed. You see, it's not skewed on one side. It's evenly allocated. It's a problem because now it's confirmed that there is still a division among FOMC members. Some think that the interest rate should be higher at the current rate. You can see 3.75, 3.5%, 3.5%. Some thinks it should be below 3%. So it's mixed, unfortunately. Let me just read it through quickly. I need some time. So what they think is there will be a stronger growth and lower inflation and unchanged median rate path, but still no extra cuts promised. Slide today's SCP is slightly dovish, with a Goldilocks of stronger growth and lower inflation. More growth and lower inflation means that the macro drop is better than in September. Same nominal rate bet, slightly lower inflation equals to real rates are marginally higher, especially in 2026. No mechanically restrictive. However, the distribution of dots is less skewed to the upside and the inflation path is clearly moving toward target. I would say that this is slightly dovish versus the previous one, but there are no new cuts on the median, so it's not a pivot. Inflation progress and stronger growth is reduced to the upside rate, should be read as banning for risk assets mildly negative USD. Honest Powell leans hawkish in the press conference. I bet that Powell is going to be hawkish. Let's have a look at the open position. Yeah, I'm going to keep the sells. So the FOMC summary of economic projection was slightly dovish, but I don't think that Powell is going to be dovish today. He hasn't been significantly dovish in the past 4 years. So if I had to bet, I would say Powell is going to be hawkish. Let's have a look on how yields reacted to the news. Let's see, 2-year Treasury yields. Treasury yields dropped. So yeah, the fixed income market interpreted this document as dovish, slightly dovish, because we had a drop on the 2-year. And we had a drop on the 10-year, which is bullish for gold. Let's have a look on indices. NASDAQ hasn't jumped. US 30 is flat. S&P is flat. Crypto market. Crypto market is flat as well. Everything is flat because of the tepid economic projection. Now we just need to wait for the press conference. Two options. Either I'm going to start buying and change my sell positions because of this slightly dovish economic projection that you can see right here. I was hoping that today's FOMC is going to be an easy win for the last main macro event, the biggest macro event of 2025. Yeah, market hasn't jumped significantly. Look at that. There's virtually no movement on gold. It's waiting for Powell. The question is he gonna say good evening tonight or good afternoon? Because if he says good afternoon or good evening, you know, that's going to move the market. Yeah. Volume is low. That's a tough nut to crack. Is the market going to jump on the interest rate, the slightly dovish? We have to decide now. Market is creeping up. I'll be down 1,000. Not easy. Yeah, I'm gonna close down the sells, booking 1,000 loss. I'm gonna change to a buy. Mostly because when you look at the yields, 2-year treasury yields are dropping. So this is why I changed into a buy. Simply just reading the fixed income market and going with the trend. Gonna enter another buy. But if Powell comes out hawkish tonight, then I'm screwed. Yeah. But, you know, market could jump on a good evening. Why they can't publish an easy unilateral decision on monetary policy? Why they have to make our life more difficult? Cunts. Okay, in the meantime. Yeah, looking at the document, there's literally no change. The only thing that they changed, because you can see in the previous, so I have 2000 and the October, September and December rate cut dot plot. So this is the September. If you look at my browser, this is the September one and this is the December one, and you can see that the dots didn't change, just marginally, so it's not significant. But what changed is on page 3, you can see that fuck, it's almost the same. Are you taking a piss? But anyway, a slight increase in growth and lower inflation. It's hard to see, but you can see these things moving up and down. And what changed? They accepted that inflation is on track to 2% and growth is going to be slightly higher. So they didn't promise new cuts at all. And the median on the dot plot hasn't moved, hasn't changed. So it's slightly dovish. It's not dovish, it's slightly dovish, which is a pain in the ass. The question is the market going to accept and be happy with this, or are they waiting for Powell to deliver a hawkish speech? Yields are dropping, which is bullish for gold. And gold is now above the daily and the weekly pivot. And currently positions are running in 140, 150 pips profit. Sound check. Are you guys still here? What is your take in today's summary of economic projection? Let me hear your thoughts and ideas. Come on, guys, it's only a document. What do you think about next year's economic projection? Yeah, this guys, the market hasn't moved. It didn't jump. It's decisions. We need to come up with a strategy because Powell is coming up in 17 minutes. 17 minutes? When is Powell coming? I bet as soon as Powell comes on stage and says good evening, the market is going to crash. Because there was no change in the median of the dot plot. And once again, let me just read it out. So the document only forecasting slightly lower inflation towards target of 2% and higher growth in 2026. So the base case scenario that the market leans on disinflation and dovish tails, which is likely bullish for gold. Initial squeeze higher as real rate expectation for 2026 and 27 ease at margin. But this could be also a hawkish hold. Yes, inflation is lower, but the Fed didn't add more cuts and real policy looks slightly more restrictive. And what's going to happen is Powell is going to stress that they need more evidence and keeps the higher for longer rhetoric alive. What do you think about this? No. No. No, then change back to your sell. Yeah. Okay. After thinking and jumping in and out, well, not I just only changed once, but I'm going to change. I'm going to stick with the original plan, which is a sell, and I just closed down the buys and switched to a sell. It's not easy, I understand, and even myself was hesitating, because there's always two sides of the story. When you look at the dot plot, when you look at the information in the summary of economic projections, if there is almost no change in the median of the dot plot, almost no change in the forecast, how would you interpret it? Dovish or hawkish? Is it a dovish cut or a hawkish hold? Which one is it? Yeah, fixed income market, which is always a good forecast, dropped initially, but now it's stalled and stopped. Let's read the chat. So Mr. Engelbrecht is trusting that the price is rising now, but should drop at the conference time. I hope so. Piotr is waiting for 41.57 for long. If it drops to 57, I think it's going to down even further down. Manuel, I believe Paolo is going to be hawkish because the data doesn't change at all. Yeah, thank you. And plus, don't forget that we have 42 days of blackout. So Paolo is going to keep the higher for longer rhetoric alive and need more evidence. What do I mean Paul is live? Paul is not live. Paul is coming in 14 minutes. I think you opened a different stream. No stop loss? Not yet. Full margin? No. If you don't go full margin, you don't need a stop loss, but I will set a stop loss soon. Many traders don't use a stop loss at all. Obviously, with 2 lots, I have to use. So I'm going to risk 2K, 1,800. Yeah, I'm going to use 3K on each trade. Yeah. Big money at stake. Full margin, triple your money Wednesday. FOMC, triple your money. Yeah, those of you who just joined, unfortunately, we had a quite boring summary of economic projections released. The median of the dot plot hasn't changed, so these tiny dots hasn't changed at all. And in the meantime, by the way, I'm entering another sell on gold, so I have 3 sells. 3 sells on gold. So the dot plot, the median hasn't changed too much or significantly. The only change is in the ranges of economic projections, or the statistics of economic projections, the forecast of economic projection, or just economic projection, whatever you call it, which runs from 2025 to 28 and the longer run. And what has changed is that the SEP alone was mildly dovish versus to the September one, thanks to lower inflation and stronger growth with no extra hikes. So the Fed is not going to hike any extra in 2026. We're going to have slightly lower inflation and stronger growth. So the document itself is dovish. But when you factor in the personality of Powell, I'm almost convinced that he's going to keep the stronger or the higher for longer rhetoric alive, and he's going to mention multiple times that they need more evidence for any decision. So they're going to follow the data-dependent decision-making approach. That is my view right now. Any comments, guys? Who is Francisca? Lisa, hello. Yeah, but Trump is actively looking for a replacement for Powell for a long time, sadly. But yeah, definitely, it's a good reasoning. What do you think? How do you interpret today's SOP? What do you think? What's your interpretation or takeaway from the summary of economic projections? Do you see it as a dovish cut or a dovish document or a hawkish hold? Mm-hmm. But what is your takeaway? Buy or sell? Yes. Yes, yes, yes. What do you see in the ADX? Good. Thank you. Thank you for the support. We win together, we lose together. Very nice. Would you like some music, Lisa? Just a slight background music. Oh, sorry. Is it okay, the volume?
Little bit too low.
Too low. Pump up the volume.
Yeah, I think enough to.
Yeah, no, it's good.
put, and when all the positions are in profit now, ladies and gentlemen. Let's look at free sells. I hope Paul is going to be true to himself and be hawkish tonight again,
5 minutes.
as he always. Yes, yes, yes. Big B is coming on stage very soon. Okay, I'm gonna grab some water. We didn't use leverage back at the hedge fund, no, because it was purely cash equities, which doesn't require any margin. Sorry, not margin, but leverage. And I traded fixed income products, so it was US corporate bonds and government bonds and futures products. So the beauty of bonds, and especially, the beauty of futures, that you don't need to put down the full amount as with, for example, cash equities or Forex. So you trade pretty much similar as a margin, but you only pay the initial collateral or deposit, and then you pay the premium, and you only settle the bill at the end of the contract. But you can also decide to roll over if you trade futures. So this is why so many traders are loving futures, because they have allocated money. They don't spend all their money like they do in cash equities. If you took entry here, we got liquefied or survive. You won't get liquefied, you get liquidated. Don't worry, you don't get liquefied. I can't give you financial advice whether to enter or not. I
just took that entry and made $600. How you doing, Thomas?
Hey, how you doing, Mike? You haven't seen for ages, and suddenly
I
you're
know,
back.
I haven't been around for a while. Good to see you.
Ah, you made $600 on myself. Very nice.
Yeah, right there.
Amazing.
So across all of my accounts, so I'm done for the day.
Amazing. Yeah, I'm up about 2 to 3 grand.
That's nice. That's great.
Yeah, and going back to answer, I can't tell you whether to buy or sell, but if you want my personal trades, go to alphafx.eu. I'm sending a discounted link on into the YouTube chat, so you can sign up and get my signals and trades if you want to trade with me. But I'm not going to give you financial advice on YouTube. That would be inappropriate. but I'm gonna sell. Okay, and we should have Powell coming up soon on stage. We got 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, and 1. And the press conference should start now. I said now. Oh, let's refresh. There you go. The famous good evening is coming up soon. Look at the position. It's running in 380 pips profit, ladies and gentlemen. For now, anything is possible. And here it comes. Good evening, and the market is going to crash.
It's gonna cough.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Market hasn't crashed.
Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand.
Okay, so it's currently explaining what their observation on the real economy based on the data that he gathered together. What we are really interested in is when he goes to summarizing the summary of economic projections. Especially the part that I'm interested in is his narrative and tone, how he's going to deliver this document, because the median of the dots hasn't changed at all. Well, slightly changed, but not too much. The inflation forecast also changed. They expect lower inflation and higher growth in the US from 2026 onwards, and there are no new rate cuts are promised according to the dot plot. Now, there's two ways to interpret this. This is a dovish cut or a hawkish hold. Which one is it? It's really up to the market, but now it's up to Jay Powell that how he's going to package the bullshit that it's in his document. Sorry, the narrative of the document.
Reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run.
That's good.
Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided.
Okay, so basically he's going through the document which is bullish for gold, unfortunately, because everything that he and his team on the Fed, the FOMC, found or projected that inflation is going down, growth is going up, is bullish for gold. And I need him to switch into a hawkish narrative to warn everyone that they need more data and need more evidence to continue the interest rate cuts. This is what I'm waiting for. I'm betting on
0.5 to 3 3/4%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
quick check on the live
A reasonable
trades.
base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level.
Quick check, how are your positions, guys? Profit, loss, break even, just speak to me.
No open positions.
Closed mine.
You took
Just
profit.
a slightly profit.
Had to
No
make
open
money,
positions.
take the money.
Make the money, take the money. Full margin now. Go on. Sell. No, this is not financial advice. Don't jump in. Don't be
Let's
crazy.
wreck your account Wednesday.
It's triple your money Wednesday. Come on. Perspectives.
Our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%.
It's triple your money Wednesday, so I entered a triple sell.
Bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections,
Which hasn't
FOMC
changed.
participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for
Well, I think they pretty much copy-pasted the same answer they did in September because the median hasn't changed at all.
4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September.
So that's 3 rate cuts in 2 years.
Well, forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
Yes.
Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels.
Okay. I was going to continue to talk about the open market operations and the ending of quantitative tightening, but I really need Powell now to start talking about or warning market participants and be cautionary that they need more evidence to support rate cuts, and they're going to make decisions based on the incoming data, meeting by meeting. And I really need him to hit a hawkish tone.
Reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been...
Pardon?
Your live video is scope second pack.
Oh, I did change it. Let's have a look on the open positions, running at 400 pips profit. Okay, once again, those who wish to join the AlphaFX community, you are free to do so going to AlphaFX website for daily signals, morning briefings, and live trade with me. You get a discount link in the YouTube chat. It's pinned to the top of the chat on the left-hand side, right-hand side. And we are running now at 700 pips. I'm gonna put stop losses slightly lower, hoping that it won't come back.
September and 175.
Improving productivity out there. What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too.
Gold is moving down.
It is it's partly that consumer spending.
Speak to me. Who's in profit?
I am.
Too choppy for me. I scalp. Too choppy.
I
Yes.
am.
Well, it is choppy, but you know, if Mike, I'll give you a tip. If you go on a daily time frame, it won't look as choppy as on the 5 minute or the 1 minute, or do the weekly. Yeah, the weekly is you know, it looks very promising to me. It hasn't moved significantly. Yeah, just trade on the weekly chart.
Yeah, thank you.
Oh my God, Daddy's making money. You know, I was really doubting myself today with the second thoughts about what's going to happen. Is it a dovish cut or a hawkish hold? But it wasn't easy, but, you know, finally it's paying off. All that education, all the student loans and all those experiences. Okay, I think I'm going to take profit now.
So what is this? A hawkish cut or a dovish cut or a hawkish hold?
Fuck knows. The Q&A is still ongoing. I'm gonna take profit on all positions now. It's 500 pips. I'm gonna take the money.
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have.
Where is it? 0.8.
Policy rated, 5.4%.
Okay, I took profit on 2 positions, and I'm going to leave one runner.
Very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided
400 for Alzaf. A lot of buyers waiting at 41.87. Let me check the price level, 41.87. But that doesn't mean that they're going to buy.
And so we did that. We did some cutting, and then we paused for a while to.
How do you know they are actual real buyers?
In the middle of the year, and then we resumed cuts in
Maybe it's just buying back the shorts and it's take profit level.
We feel like where we're positioned now puts.
I would say it's going to go down to 41.50, Piotr.
If I could just follow up on the SCP, you have a whole lot of big increase in the growth numbers.
Guys, we fucking made 600 pips. and it's still running at 700 pips profit.
That's a good day. That's a good day.
Another day, another dollar at the AlphaWorks. I'm gonna lower the volume on the Q&A. I'm not interested anymore since I took profit. Fantastic day. Bit of indecisiveness on my end, so I do apologize for that. Well, not apologizing. Everyone, doesn't matter what level you are, you're still going to doubt yourself, even if you trade for 20 or 30 years. But you know, when you go into war, it's normal to have second thoughts and, you know, to sometimes question yourself. Yeah, 41.57 looks more better reversal and a better take profit level, and I show you why, Piotr. If you look at my chart, you can see it is exactly at the bottom of the descending of the bull flag. So that would be a very nice take profit level. 2-year bonds pulled back. Wow, look at that, how much the bonds pulled back on the 2-year. And this is why we had the drop. Thank you so much, Michael. Yeah, it was a tough nut because of the dot plot. It was difficult because the interpretation was there was almost no change. But after some debating myself and, you know, questioning, I did manage to get into the right direction. How was your day, guys? Give me some feedback, please.
Good evening. Thank you,
Good
Thomas.
earnings. You're welcome. Did you guys take profit? Because the market is now pushing back to the pivots.
Yes.
Okay. Yeah, I'm done for today, guys. You enjoy the rest of the evening. Let the market digest this. Oh, whoa. Look at that. Market is pushing down. We're going to make more money. Yes. Have a good evening. Have a good night rest. I would take profit. This is not financial advice for non-members. For members, I give you my financial advice in Discord, in the private Discord. I wouldn't hold lower than 41.60, 41.55. I would take profit at that level, because when you look at on the technicals, I use technicals to determine entries and exits, and what I see is the probability that price is going to drop all the way to 41.50, and that aligns with multiple signs. Okay, thank you so much, guys. Have a good night and see you all.
Thank you, Thomas.
Thanks, Thomas.
Thank you,
Take care.
Thomas. Good
Thank
night.
you. Have a nice night.
Thank you, Thomas.
Bye.
Bye.
Thank you.
So once again, another day, another dollar. You can see the live positions. 600 pips. It was 700 the highest, and it's still counting. Overall, thousands of pounds profits today. Almost 750 pips profit. If you wish to join the AlphaFX community, if you want daily signals and morning briefings on high impact days, and if you want guidance, and if you want access to my trades, like this one today, you can see on the screen that I traded live. Here it is, still running at 600 pips, 700 pips. So if you want to get access to my live trades on a daily basis, get notified when I enter a trade, go to alphafx.eu. But use the discount link in the YouTube chat. This is on the on your right hand side in the YouTube chat. It's pinned to the top. There's only 2 spaces left, and I'm going to close it down and reopen only in the new year. So there's only 2 membership left for £399. This is a one-time fee, not monthly. This is a one-time for lifetime. You get morning briefings, you get live tradings, you get guidance from me. I trade financial news. Most of the traders on Instagram are afraid of these. But anyway, thank you so much, guys. I hope you made some profit. Don't forget to claim your discount in the YouTube chat. Thank you so much. This is the AlphaFX.